Hello, everybody. Welcome to the Property Factory's August 2024 webinar.
Hello.
Andrew, good to have you back, mate. It's been it's been a couple of episodes.
It's been a while. I've been on sabbatical, but I'm back for a guest appearance.
Yeah. So obviously, for those of you that have been here in the past, a couple of webinars ago, we had my colleague Rian on, who spoke a little bit about his property investment journey, and then obviously in the last webinar we had Dan, our sales manager, on, who was a big fan of Brooksfield, so who was the developer that was speaking at the time. So we thought it would be appropriate to get him on. But Andrew, it's wonderful to have you back, mate. I know you are certainly a Queenstown and Queenstown Lakes enthusiast.
I'm passionate about Central Otago Lakes. So yeah, good to talk about this one.
Certainly appropriate to have you back. But we're in August now. Year's flying by.
It is, isn't it?
Yeah, the days are getting longer.
Yeah, weather's getting warmer.
And interest rates are coming down.
Yeah, exactly.
So it could be a lot worse. What are you seeing out there at the moment? Things seem to be picking up. I mean, especially with rates coming down. It is.
Yeah, I think so. I think that the rates coming down earlier than we initially thought made a big difference.
Yeah.
There's definitely a lot more positivity out there.
Yeah.
And that'll flow through. It'll take a little while for it to work right through the economy, but
yeah,
I think property for sure will probably see it first.
Yeah.
So definitely. There's still deals out there, but developers are some of them are starting to raise their prices. There's less negotiation than there was, but there's still a few deals out there, so come talk to us about those. But definitely things are on the up. I think we're definitely past the bottom of the market now.
Yeah.
And on our way up. So
yeah, for sure. I think spring will definitely help as well, right?
So,
the property market in general, regardless
of what
interest rates are doing, are a bit better, and we're certainly seeing deals start to move out there. But we sort of ummed and ahed about what to do this webinar topic on.
We did, yeah. It was an interesting one.
Obviously, we toy with it every single month, but we just decided, like, everybody's always asking. I know in property investment at the moment, the numbers sort of are a big topic of conversation: rental yields, cost to own a property, and that sort of thing. And we just sort of thought, do more expensive properties in more expensive locations actually make sense as a location to invest? And we thought, well, do we do Auckland? That's not exciting. Do we do, Queenstown? I think Queenstown's probably one of the most sexy locations in New Zealand, so to speak.
Yeah,
everybody wants to buy a house there, but is it a good idea? And so we thought it would be, a wise idea to cover the Queenstown property market.
I think, very expensive house prices in general in Queenstown. So, how do you get into the market there? So we'll talk about that. Yeah.
I mean, just off the cuff, like, Andrew, I know probably what your answer is going to be at the end of this webinar. I know you like the Queenstown and Wanaka Lakes region specifically. You own a few properties there yourself. I think it does make sense for various reasons. I mean, some of the numbers, like rental yields and whatnot, might be a bit lower than the rest of the country, but it's been a relatively resilient property market in recent years. And so I think if you can afford to get your foot in the door, then it's certainly worth doing so. And we'll speak about why in slides to come and further in the webinar.
Yeah, for sure. I mean, I think so, but the average house price is very expensive in that area, but there are, prices houses in the lower price bracket that I think, are more affordable when you can get into that market. So we'll talk a bit about that.
Yeah, for sure. Hey, look, now for those of you that are new here, you may have seen a wonderful advertisement on social media and thought that sounds like something I'd like to learn about. But for those of you that don't know, the Property Factory, which is our business, we're essentially a real estate agency that specializes in selling, recommending and listing new build properties across New Zealand, right?
Yeah, that's right. That's basically what we are. We deal with a lot of different developers around the country. And as you've seen on previous webinars, we pretty much look for the best deals, whether it be yield specific, price specific, just whether it's a good deal in that area. And the best deals end up on our website.
Yeah, for sure. So I think we have relationships with around 50 different developers across New Zealand. We're sort of actively working with around 20 at any given time. And then of those 20 developers, we're probably sort of I don't want to say pushing, but actively recommending sort of between 5 to 10 developments at any given time that we really think present the best deal in the marketplace for whatever reason, whether that be capital growth, rental yield, location, and different metrics like that, right?
For sure, and we look at it, it's a numbers-based approach a lot of the time. So basically what we can do, we've got a number of different reports we've developed where we can work out which properties you should buy based on your own situation.
Yeah, for sure.
And then from there, you can talk to our sales team and we can recommend the right property. So
Yep.
we do have some properties that are more yield-based, more capital gain-based, might be just a discount to what we feel it's worth in the market. And for whatever reason, one of those properties might be better for you. So, you know, so we do work with people to help them set up property portfolios and also work with people to help them grow their portfolios or existing investors that just want the best deals in the market. So,
and we do a whole lot of due diligence on all of the developers we work with. And obviously we've covered that in the past, but often like for us, because we work with so many different developers, some are a lot easier to deal with on a day-to-day basis than others. And often that can be a relatively good indicator as to how well they're going to be to work with down the track. Are they going to build the project? Are they going to do what they said they're going to do initially, which I think is a big factor in determining whether we want to deal with a developer or not.
Yeah, for sure.
Yeah, so we'll be covering a few things tonight, and I will pop that. I'm finally getting the hang of this slides thing, which is wonderful. So look, we'll give a bit of a property market update, and we've done that briefly already, but we'll just discuss some recent changes in sort of the broader economy as a whole, such as obviously OCR changes, which I'm sure everybody is sick of hearing about already. And then obviously, because this webinar is specifically about whether property investment in Queenstown and Wanaka is actually a good idea, we'll do an overview of the Queenstown Lakes District market. Obviously, does it make sense? And then at the end, we'll do a Q&A session. So please fire through your questions throughout the webinar, and we will endeavour to answer those questions at the end of the webinar, just to keep the webinar going smoothly and so we can get through the webinar in a timely manner. But any question you've got, please flick it through. We will certainly answer it at the end. We had our Christchurch property investment evening. Must have been a couple of weeks ago now, was it?
Well, a couple of Wednesdays ago now.
Which was essentially a beefed up webinar, really, wasn't it? I mean, it was obviously similar format to a webinar. It was just in our office. We had about 70 people turn up.
Yeah, I'd say 70 or 80. It was a good turnout. So no, it was really good to see a lot of people there.
Yeah.
And good to do something in person, because it's hard sometimes when you're sort of talking through a webinar, you don't know what people think of you know, whether you're talking about something interesting or not. Whereas it's easy to read faces in the crowd and work out whether what you're actually talking about is interesting to people. And it was good to talk to a lot of people afterwards. So no, really good and great. The OCR came down on the same day.
Yeah, it was actually really well timed. In fact, when we were speaking, I was sort of looking into the crowd thinking, you know, a scale of 1 to 10, how much am I boring these people? But, you know, we got a few smiles. So, you know, we're going to try and run these webinars seminars in person in our office every quarter. And obviously each seminar will cover a different topic. So if you're in Christchurch, certainly come along. There's food, drinks, and it's just really nice to meet people, not necessarily our clients or customers, but just people that are interested in the property market and property investment in general.
Yeah, even if you come along, you might meet some other people there that are also interested in property investment, and you can talk and exchange ideas.
Yep. So in case everyone missed the news, which I'm sure they didn't because it's been all over the media, the OCR, or the official cash rate, dropped a couple of weeks ago for the first time in over 4 years, which for property investors and anybody working in the property sector has been incredibly welcomed news. So it dropped from 5.5% to 5.25%, 25 basis points. And as a result, banks have actually relatively aggressively started cutting rates, probably more aggressively than most punters and economists and commentators out there thought, which is promising as well. I mean, Andrew, what are your thoughts on all of that?
I think even before the rate cut came from the Reserve Bank, there was quite a few banks starting to lower rates. I think that's also because wholesale rates were quite good as well, so there's quite a bit of margin there for banks. And they're also, you know, factoring in, I was thinking maybe it was 50-50 whether it was going to come down.
Yeah, I personally didn't think they would.
I was hopeful, but I think it's a good thing. And obviously rates have come down a lot more since then. And you can see some 3-year rates are at 5.79 today from a couple of the banks. So definitely good news for property investors and homeowners moving forward. I think probably now from there we'll see the Reserve Bank cut the rate by at least 0.25 basis points every time we have an announcement, which is going to make a big difference.
Mhm.
And we'll look in coming slides, where we think it's going to get to in the next couple of years.
Yeah. Yeah, the OCR is an interesting one, right? Because obviously the Reserve Bank has a mandate to keep inflation between 1% and 3%. And obviously they use the OCR as a lever to sort of control inflation. When inflation was out of control, they started hiking rates in an effort to slow economic activity, slow spending. But I think the main reason we've seen OCR updates and OCR announcements in the news recently is because everybody's so concerned as to what's going to happen with, their mortgage repayments and the cost to own their own home. So it's interesting. I think there's certainly a correlation between the OCR and house prices, but probably the correlation has been stronger than ever since COVID, just because the OCR or the Reserve Bank dropped the OCR so aggressively in order to fuel economic activity, which obviously had flow-on implications to house prices, and then raised the OCR so aggressively in order to control inflation, which again had flow-on effects into house prices. It's an interesting one, but yeah, I mean, never probably in my lifetime anyway has it been scrutinized so much what the OCR is up to.
Yeah, it's a tricky one, I guess, because often it's reactive, like in the GFC. House prices rose rapidly through different means because money was easy to get, and basically then all of a sudden the whole thing collapsed, and then interest rates had to go through the floor.
Yeah.
Whereas this time it's more controlled. Whereas at the start, interest rates got really low, but now it's almost like a GFC was a bad banking practices that got us into a situation there. Whereas now the Reserve Bank's almost put us into a recession on purpose to control inflation, which is a bit of a different situation. And I think all the fundamentals are strong within the property market. So I think in the GFC, it took a while for prices to rise again. Where I think now the fundamentals are strong. It's just that people haven't got a lot of spare cash because their mortgages are so high. But I think as interest rates come down, property prices will rise quite rapidly as people get back into the market. So I think it's a bit of a different situation than we've seen before, as you say.
Yeah, it certainly seems as though the OCR is going to continue to come down. Like in the Reserve Bank's latest monetary policy statement, I think they stated they expected it to be around 4% by the end of the year and sort of continue to fall through to 2027, which obviously is good news for interest rates and ultimately house prices going forward. So yeah, no, really good stuff. Hey, we are doing I don't think we've done this on one of our webinars before, but tonight we're going to be running a few polls just to try and keep everyone engaged. Obviously, as we said earlier, we don't have the luxury of actually having you all right in front of us. So in order to keep you engaged and to not be too boring, we are going to run a couple of polls. So we've got this one here. Where do you think interest rates will be in 12 months from now? Now, if I'm correct, everybody should have the opportunity to answer this question as of right now.
Right.
So submit those. And then, Jonathan, sorry, are they answered at the end or will we see them now? Okay. Can't see them now, but we'll endeavour to go into those
back later in
the end.
We'll come back later in the presentation. And
so back onto the OCR, look, this is all relatively boring stuff, but the general trend from the main banks is that they see the OCR coming down over the next couple of years, which is obviously positive for anybody that is interested or invests in property and positive for property prices going forward. Now, just a quick disclaimer before we get into the rest of the webinar. This isn't financial advice. We like to think we know a thing or two about the property market, property investment in general, but this isn't financial advice. So just keep that in mind going forward. This is our opinion and our opinion only, but from our past experience, we think Queenstown has performed relatively well, and we'll go into the reasons why in the next few slides. Would you own an investment property in Queenstown or Wanaka? So again, please endeavour to answer this question. As I said, at the end, we will go into the results of the poll just to see what everybody answers.
And this would be regardless of whether you could afford it or not. So if you had the money to buy one in Queenstown and Wanaka, would you? That would be the question.
Okay.
Okay.
I mean, would you invest in Queenstown and Wanaka, Andrew?
Yes, of course I would.
I would if I had enough money, which I don't, but anyway.
if you're looking for capital gains, I think it's the best market in the country and will continue to be.
Yeah.
Obviously, yields can be a bit tight down there, but there are ways around that. So we'll talk about that a bit more in the later in the webinar. But
Yeah.
I think definitely if you can afford to, you can't go wrong. Probably, what have we got there?
I think we've got 88% who said
88%
yes, of
say
course,
yes,
we'd
of
invest in
course.
Queenstown.
Yeah.
It's wonderful to see that poll working, and hopefully we'll get back to the other one at the end of the webinar. But I think the thing about New Zealand is everybody, well, not necessarily everybody, but every time I go there, I think, I wish I owned a property here. When you're looking over the lake, you know, drink in hand, it could be a lot worse.
Could be, and a lot of people do the same when they go down there. So, yeah, I think definitely if you look at Wanaka, Queenstown since the 1970s, it's been the strongest market in the country easily.
Yeah.
I mean, prices back then were you buy a section for nothing, a few $1,000s, and now sections are millions. So, you know, I think it'll continue to perform well, and we'll talk a bit more about that later on. But no, definitely, if you can afford to buy there, that's a great place to buy.
Yeah, for sure. Oh, back to the slides. So let's look at, I mean, one of the obvious factors that drives house price growth and initially demand in the property market is population growth. So currently, Queenstown Lakes District has a population of around 52,000 people compared to New Zealand, which is just over 5 million, and Auckland, which is about 1.6 million. But the interesting thing here to note is that the population growth for Queenstown in 2023 specifically was a lot higher than that of New Zealand and Auckland. I think part of that is due to the fact that since COVID, borders are back open. Queenstown's obviously quite popular amongst international visitors and international investors as well. But even if we look back over the last 20 years, Queenstown's population on average has grown 5% relative to 1.3% New Zealand-wide and 1.6% in Auckland. So that's an interesting stat, Andrew.
It is definitely.
Why do you think that is?
Interesting stat, and I guess it's because even though it's on a small scale with the Queenstown, Wanaka area being, you know, only just over 50,000 people, it's still, there's still supply and demand, the same metrics still apply.
Yeah.
So basically, I think because it's just a desirable place to live, people want to move there for different reasons, whether they're into skiing or, you know, even nice weather, they might be into outdoor activities, or it's just a nice place to be, as you say, sitting having a beer by the lake. So yeah, there's a lot of reasons, mainly lifestyle reasons, why people want to move to that region. And it's not just people within New Zealand, but it's a lot of overseas people as well that want to move down there. So basically, yeah, I mean, if you see growth there in 2023 was what, 4 times the national average percentage-wise, that's going to cause a big supply and demand issue. And you've also got a lot of other things to consider. And Queenstown, especially, where it's almost like Wellington, you've got a small town surrounded by mountains. So, you know, it's hard to, unless you build up, it's really hard to create more space to build even apartments. So obviously then you've got a supply and demand issue, and prices are going to go up. You can also see here, average house prices are obviously massively higher than anywhere else in the country, which means if you're looking at people's incomes, house price to income ratio is very high, almost twice the average, which it's an interesting one. And I think the main reason for this is we're getting a lot of people investing in Queenstown and Wanaka that don't actually live in the area. So they might live in Auckland, Christchurch, or even overseas, and they're buying expensive houses down in the Queenstown Lakes District region, and that drives the price a lot. So maybe, yeah, these people probably don't have their incomes captured in Queenstown. They might have them captured in Auckland or Christchurch or overseas. So that's probably skews these numbers a bit.
Yeah, I was going to ask you that. Like, do you think the fact that, you know, I'm a wealthy Aucklander and purchasing property in Queenstown, is my income captured in the Queenstown statistics? My guess is probably not.
Yeah, I would say not, because your income will be captured wherever your principal place of residence is. And if someone's living in Auckland, they've got a holiday house in Queenstown, you know, they're probably having their income captured in Auckland, whereas they own an expensive place in Queenstown. So that sort of skews those numbers a wee bit. So probably don't read into that too much, although I would say probably house price to income ratio still is high in that region. It's probably not as high as it looks there.
I mean, the fact that Queenstown is such a lucrative destination for not only Aucklanders, but overseas investors and people looking to holiday in Queenstown certainly doesn't help your average Joe blogs that,
No,
wants to
absolutely.
purchase a property in the likes of Queenstown.
No, that's right. I mean, there's a
Example.
lot of out of town and overseas money coming into Queenstown, Wanaka, which drives prices.
Do you think the fact that property prices in Queenstown are so out of whack with median incomes could prevent prices from going higher in the future, i.e. are house prices becoming so unaffordable in Queenstown that demand will be reduced?
Yeah, it's an interesting one, and they've been saying that in Queenstown and Wanaka for years. Like prices always go up. I think we'll even see, I think there's a slide coming up soon which shows that the Queenstown Lakes District, just hasn't gone down the same as the rest of the country, even with the downturn we've seen in the last couple of years. And I think probably not, because they've been talking about prices. Every year prices go up in Queenstown and Wanaka, and everyone that's down there says, oh, prices can't go up again because, it's just out of control. It's crazy compared to anywhere else. But I think if we look at some other areas around the world, like other resort areas, say Whistler, for example, or Aspen in Colorado, like the average house price in Whistler is about 7 million New Zealand. The average house price in Aspen, Colorado is over 8 million New Zealand dollars.
For sure.
And there'll be some places in Europe like Zermatt, Chamonix, where house prices are very high as well. So I think we're a long way under that still in Queenstown, Wanaka, and there's nothing to say that the destination there is any worse than the other ones we've talked about in Whistler or Aspen. Like arguably better because you've got the lakes there and everything else. So I think a lot of overseas money will keep driving prices, and I think the ceiling's a lot higher than what we see there at 1.8. And you just have to look at what's happened to some of these other resort towns to see that that's what's going to, that easily is what can happen down there. So it may become a rich person's playground, which is a bit sad for some people trying to get in there, but I think, house prices will continue to rise in that area for those reasons.
Yeah, I think for a lot of people on the webinar the question will be, are prices so out of touch in Queenstown that it all of a sudden becomes not the best place to invest in? And we'll cover that in a second. But I guess the gist of it is, I think if you can afford to get into the Queenstown property market, it could certainly be worth it. Obviously, one thing we certainly look for when trying to unpack whether or not a location is a good spot to invest is infrastructure projects on the go and future infrastructure projects. Obviously, Queenstown's humming as it is, but there are a few different infrastructure projects on the go that will look to improve Queenstown as a destination and improve the amenities accessible to residents and tourists within the Queenstown area. Like there's this $250 million Queenstown road upgrade, which I don't know if anybody's been to Queenstown recently, but it looks like a relatively significant infrastructure project. I think these infrastructure projects are a little bit different to some other infrastructure projects in New Zealand, though, in the sense that they're improving amenities to those within Queenstown. It's not like the infrastructure project comes first and then the population grows because of that.
Yeah, I agree. I think probably if you're looking at other infrastructure projects, like some of the motorways in Christchurch were quite different, where they opened up new areas like Rolleston and North Canterbury, where the new road opened up whole new subdivisions and suburbs even. Whereas I don't think this will do that, but what it does is it brings a lot more money into the community. You got contractors working there and all these people working on the roads and all the other projects there. And that just brings money into the community. They spend money at the bars, money at the restaurants, retail stores and everything else. And that brings money into the Queenstown Lakes District. So it definitely helps in that respect, but probably doesn't open up new areas as such. But it still helps.
I mean, I suppose it improves the amenities, improves the lifestyle of not only Queenstown's residents, but also tourists currently, which therefore encourages more and more people to move to the region.
And traffic is pretty bad getting into Queenstown.
Oh, terrible from Frankton.
Shocking. So, I mean, it's going to help.
But regardless of all of these wonderful infrastructure projects, Queenstown obviously does have some serious problems. And the main one, which, I mean, I've been to Queenstown a few times. There's not a lot of problems there, but one of the main problems in Queenstown is the fact that property prices are so expensive. And so does it make it do the fact that property prices are so expensive make it a bad place to invest? Like, do the rental yields in Queenstown stack up, for example? Just because a property is expensive, does it make it a bad investment property? I mean, I'm not sure. What are your thoughts?
It's an interesting one. I mean, probably the average rental yield in Queenstown is quite low because there's a lot of very expensive houses in Queenstown, and Wanaka for that matter. But I think there are some really good deals out there where the yields are quite good. For example, we've got a project at the moment that we're selling in Queenstown where the yields are almost 5%.
I think they're just over 5%.
Over 5%. So there are good deals out there and they're well under $1 million. So there's definitely deals out there where you can still get into the market and reap those good capital gains while getting good yields. But you've got to be picky because a lot of the houses, if you buy a holiday house down the road somewhere, it's not going to have a good yield. So you need to be careful what you buy if you're looking for yield down that way. But definitely, I think there's still opportunity there. There's no doubt about that. Obviously, there are issues in Queenstown Lakes where you've got sort of a range of people living there, from the super wealthy that are working from home to a lot of people that work in the service sector where incomes are quite low and maybe even close to minimum wage. And then where do they live? So there's definitely issues around that down there. And maybe even some of these companies like Real Journeys need to look at setting up their own housing for people that are in that boat, like a lot of the other resorts do around the world. So maybe there are ways around it, but that's definitely an issue down there, is that rents are really high and in a lot of cases wages are quite low. But I don't think that necessarily affects property values, but it does affect people living down there in different sectors, I think.
Yeah. One graph or table, one graph we get asked a lot about at the Property Factory is this particular graph here. And what it's showing is essentially whether a property market or location is over or undervalued at any given time. So you'll see here it's sort of a scale. Any time where the scale is over 0%, we would consider a property market to be overvalued, and vice versa. So if the property market is under 0%, we'd consider it to be undervalued relative to the historical mean. So if we look at Queenstown's property prices here, we can see, based on this graph, they are significantly overvalued. But does this necessarily mean that Queenstown is a bad spot to invest? Like if we look at Auckland, for example, if we do this, if we run the numbers for Auckland, undervalued. If we run the numbers for Christchurch, undervalued. But Queenstown certainly seems to be significantly overvalued if we compare it to the historical mean and the New Zealand average house price. Looking back, I think this looks back 24 years.
Yeah.
Sorry, 20 years.
I think so. I mean, I think Queenstown's a bit of an anomaly though, where there's so much foreign money and out-of-town money coming into Queenstown that drives prices.
Yeah.
That it probably doesn't matter so much. It's like these other resort towns which just keep going because, for a lot of people that want to live in these places, a $1.8 million house is nothing. There's a lot of super wealthy people keen to live in the region. And I think that will really drive prices. And it makes that overvalued, undervalued graph a lot less relevant than it would in the main centre where people are living and working there in a normal situation, if you know what I mean. Whereas down in Central Otago, Queenstown Lakes, it's quite different, where a lot of people are moving down there and they're not quite in the same boat as the average person living in a main centre. Yeah.
I mean, they say a picture paints 1,000 words, and this graph does essentially. Like if you look, so this graph represents house price growth in Queenstown, Auckland, or Queenstown, New Zealand, and Auckland. If we look at Queenstown, which is the red line, it's a relatively consistent upwards trend with minimal troughs. Whereas if we look at Auckland and New Zealand, for example, you'll see just after 2020, just after COVID, there was a significant drop in property prices, but Queenstown certainly bucked the trend. I noticed there during COVID around 2020, there was a slight drop, probably more so than Auckland and the whole of New Zealand actually, but that's obviously because Queenstown is reliant on tourism and overseas purchases.
Yeah.
So yeah, I mean, while according to the previous graph, Queenstown is slightly overvalued, property growth in Queenstown over the last 20 years has been, I think it's fair to say, more consistent than that of Auckland and New Zealand.
I'd say it's been the strongest in New Zealand. And you can see there, as Alex said, there's just really no troughs. you have the odd area where it flattens out, but then prices just take off again.
Yeah.
Then there's so many factors driving the market, and that's why factors beyond a normal market.
And again,
Centre.
that's most likely because property prices are driven by people that don't live in Queenstown.
Yeah, that's right.
Which is unusual for pretty much every other city in New Zealand.
Very unusual in New Zealand. It's really only usual for other resort towns. So we have to look at those other resort towns around the world to work out what's going to happen in the Queenstown area.
Yeah. Okay. So we've looked at population growth, which is obviously a key driver of demand for property, which in turn is a driver of property prices. We've looked at infrastructure projects, of which there are a few on the go in Queenstown. Queenstown market seems to be overvalued, but does that necessarily mean it's a bad place to invest? Our opinion is not necessarily. But what about rental yields? Because that's certainly another metric we look at when trying to assess whether or not we should be investing in a specific property or even location. So we touched on it briefly before, but if we look at rental yields across the country, we've got Queenstown so this is average rental yield. So if we look at the average rent in a location divided by the average property price, you've got Queenstown at 2.885%, which to be fair, we'd consider poor, right?
It's poor on average, but there's a few exceptions.
We've got Auckland at 3.78%. We probably wouldn't recommend a property with a rental yield of 3.78%. And then we've got New Zealand with a average rental yield of 4.45%, which is getting closer to sort of that okay yield. I mean, at the Property Factory, most of the properties we're recommending are north of sort of 5%, right?
Would be 5+. And it just depends what you pick.
Yeah.
And it's an interesting one because a lot of Queenstown has a big spread of properties where there's a lot at the high end of the market. And obviously the rental yields on those will be terrible.
Yeah.
But there is sort of a sweet spot at the bottom of the market where rental yields are quite good. Obviously Auckland has a lot of expensive properties as well where yields are terrible, but there's more properties in the mid-range in Auckland.
Yeah.
Whereas there's more of a high end in Queenstown, then sort of less in the mid-range, and then some sort of at the lower end where yields can be quite good and you can still experience the capital growth.
Yeah. So I guess the question is, if you're a property investor chasing yield or worried about the cost to own a property, which obviously is an issue for a lot of property investors at the moment, should they still consider Queenstown as a location to invest? Could there be properties within that market? This is Queenstown Lake, so Wanaka as well, that could suit them and their financial circumstances. Yeah,
I think so. There definitely are properties in the lower price bracket. I mean, we've had some that we've sort of sold. Probably the cheapest you get now is sort of low 700s. There's a development in Wanaka that we were selling. This one's sold out now, but there are other developments coming that we'll touch on a little bit, especially in the Queenstown area where yields can be strong and you can still experience that capital growth.
Yep, for sure. I mean, and one measure, back to the slides. One measure that a lot of investors we've worked with in the past is the whole short-term rental side of things. Now, essentially, short-term accommodation is a means of accommodation whereby an investor will rent their property out on a short-term basis. So they might list it on sites like booking.com or Airbnb in order to make the most of people looking to holiday within an area. And what we've found in the past is that often this type of, or renting out a property this way can be a great way to make the most of more lucrative returns than if you were to rent the property out long term, right? For example, we've got a rental appraisal here from a property manager we work relatively closely with here at the property. This was done on a development I think we've just sold the last one.
I think we've just sold this one out, but
in Anderson Road in Wanaka. And what they've done here is they've put an average nightly rate of $240. Yeah, a night at an occupancy rate of 80%. So on average, they've assumed that property will be rented out 80% of the year for an average nightly rate of $240 per night.
So basically, what we can see here is there are other ways to get a decent rental yield in Central Otago while still having a property down there, which may not necessarily have a good rental yield if you do it long term.
Yeah.
And one of those ways is by short term renting it.
Yeah.
And nightly rates can be very high depending on the time of year. Like Obviously, winter's very strong. Obviously, the summer months, and you can get a much better return that way.
Yep.
So that is another way to get a good rental yield from a property down in the Wanaka area.
Yeah. I mean, I guess I like anything in investment wise or investment related. Higher return is often associated with higher risk. So there is less consistency in bookings, at least if you're renting a property out long term, you know you're going to get X amount every single week. Whereas if you're renting your property out on a short term basis, while over the long term, potentially you could be better off. You certainly have to manage your cash flow throughout the year, right?
Yeah, that's right.
Like running a business.
Yeah, that's right. It's more like running a business. There is more risk, but obviously more reward. This isn't the only way to go about it. We do have some properties, especially in Queenstown, where the rental yields, as we said, are around 5%, which is really good in a long-term situation.
Yeah.
So there's two ways to go, but definitely short-term renting is a good way to get a better rental yield down there because it's obviously a holiday spot as well.
Yeah.
So
and we're certainly not suggesting this is the best way to go about property investment, but I think it is certainly worth considering if you're looking to make the most out of your property down in Central Otago and Queenstown Lakes specifically. Obviously, a lot of expenses are a little bit higher for property management companies. I guess the management of the property involves a lot more labour, cleaning fees, etc. And so as a result, the management fee is higher. Sites like Airbnb and whatnot take booking fees as well. And so the costs can add up.
The costs are higher, but I guess it just comes down to the net return once you take out your expenses. And that can be very good. So definitely worth investigating, that's for sure. You can get some excellent returns from short-term rentals down in Central Otago.
Yeah, I think the key thing to note is especially, in Queenstown and Wanaka, there's definitely a shortage of long-term accommodation, i.e. long-term rentals, hence why rental prices are so high. But there's also a lack of short-term accommodation. There's not a hell of a lot of hotels, and actually Wanaka specifically, there's a fair few in Queenstown. But
yeah, Wanaka definitely lacks accommodation, so there's a good demand there. Yeah, so definitely one to look at, and this is an example, as Alex said, from one we sold in Wanaka. And that's not far away from settling.
Yeah,
so it'll be interesting to see how that one goes.
These numbers have actually been based off a previous development we sold in Wanaka as well, built by the same developer essentially. So basically the same product in a different location. So I mean, that begs the question: Does investing in Queenstown and Wanaka actually make sense, or Queenstown Lakes specifically? I guess some of the pros is that, as we've said, the Queenstown Lakes District property market has been relatively resilient in the past. House price growth has been consistent. There's international demand. I think every property in the property market in the country has international demand, but the international demand in Queenstown is a lot stronger than that of most other main centres, for example.
It's very strong. It's a desirable
relative
place.
To the general population.
Definitely a desirable place to own a property for, a lot of people around the world. So definitely drives prices. Yeah.
And in terms of typography, Queenstown's lovely in the sense that it's surrounded by water and mountains, which generally means land is scarce. And also the Queenstown Lakes District Council is conscious of environmental factors. Obviously, they want to protect that landscape because ultimately that's what drives tourism and people wanting to live there. And so the consenting process in Queenstown can be hard. It can be hard to unlock the land that is available.
Yeah, exactly. So that means obviously that supply and demand, again, there's obviously a lag between, takes a long time to get projects through the consenting process down that way. So obviously then there's a lag and there's high demand. So again, that just drives prices, just supply and demand.
Yeah, for sure. Capital growth in Queenstown has been strong relative to the rest of the country. And then obviously short-term rentals make a lot of sense, I think, in the likes of Queenstown and Wanaka, as do long-term options. But I think when considering long-term options, if you're worried about the cost to own, probably purchasing the most expensive property on the market isn't the greatest idea. If you're looking to rent it out, certainly be worth finding that investment grade stock where the yields actually do stack up.
Yeah, definitely. It's those properties between 750 and $1 million are where the yields are. Anything over there, yields are getting tough. Unless you're in a really good short-term rental situation. But definitely, if you're looking for yield, you're looking between that 750 and $1 million. And there are some properties down there in that range that we're selling at the moment. So yeah.
And in terms of cons, I think the biggest component holding people back from purchasing Queenstown is, and certainly the factor that's put me off is that the fact that prices are so high. Like if I was scrolling on Trade Me before, there's really only a couple of new build developments in Queenstown that stack up investment wise. Any standalone home is
doesn't work.
Too expensive if you're on an average income, right?
Yeah.
The yields in Queenstown are obviously low, as we said. I think if you find the right property, though, they can still stack up. And there isn't actually a lot of new builds in Queenstown.
There's not a huge amount, again, because the consenting process is tough. So there is a lack of new build investments down there. So yeah, again, I guess that's a con, but it's also a pro if you find the right one.
Yeah. And the fact that you're not only competing with the local market, you're competing with investors from everywhere, really.
Investors all over the world.
Can make finding the right property
tough.
Quite tough. So, I mean, what do you reckon, Andrew? Does Queenstown make sense as an investment? I know we've said multiple times in this webinar that we think it makes sense if you can get your foot in the door in the market.
Yeah, I think it still definitely does. I mean, it's a unique situation in Queenstown where you do have all that international and out-of-town demand, which will always drive prices. So I think it's definitely a good place to invest as long as you can find a property within your budget that has a decent yield, so you don't get, I guess, you don't want to end up with a property where the yield's really low, even if you can afford it, because then it's harder to buy more properties because your servicing's really tough. So I think as long as you get the right property, then definitely a good place to buy still. And I think, prices will keep on going just mainly because of out-of-town demand is the main reason. It's so desirable from people around the world to want to live there or holiday there that they will ultimately drive the prices.
I mean, I guess that begs the question. Obviously, for those that have attended our webinars in the past, there's obviously a lot of other locations we think make sense as decent areas to invest. But if you can't afford to get into Queenstown or Wanaka, where else in that central Otago area do you think could make a bit of sense, and why?
Yeah, I guess there's some other areas, like Cromwell's a good example. It's sort of positioned between Queenstown and Wanaka, so a lot of people actually live in Cromwell and commute to Wanaka and Queenstown for work just because it's a lot cheaper. So I think Cromwell's another good option. You've also got a lake there. Ski fields aren't too far away, and it's got a developing town centre. That's probably what lets it down at the moment. I think there's a lack of a town centre like what Wanaka or Queenstown has, but I think it'll get there. So Cromwell definitely a good option. There's also areas like Tekapo, which
even Tekapo is quite pricey.
It's quite pricey now. It's really taken off. Twizel was even another location where prices even have taken off quite a lot there. So there are some other areas that are still a bit cheaper. Who knows? Maybe Tekapo is a place that'll keep going up in value.
I think the interesting thing about Cromwell is it is basically smack bang in the middle of Queenstown and Wanaka, and it is yet to experience that exponential growth that both Queenstown and Wanaka have experienced over sort of the last 10 to 20 years. It's a bit like for those of you that are familiar with Rolleston, just south of Christchurch. I mean, those that bought in Rolleston 20 years ago will be thanking themselves now. And Cromwell, I guess, is a similar story.
I think so. I think Cromwell's definitely an area that is undervalued compared to the other areas around it. So definitely a good place to buy. And we will have some projects coming up in Cromwell that we've been working with developers on coming up in the next few months too. So definitely an area to watch.
So I guess that begs the question, what properties do we actually have in Queenstown and Wanaka at the moment? And the simple answer is we actually don't have
a lot.
Just because there is a real lack of new housing in the likes of Queenstown and Wanaka. We've certainly had projects in these locations in the past, and they've sold really, really well. Because that's sort of the best of both worlds, in the sense you get a decent yield at that sort of 600 to 800K price point, and the capital growth is really, really high. And generally there's a trade-off between the two. We have one really, really exciting development in Queenstown on our books at the moment, which I think makes sense both from a growth perspective and a yield perspective. So if you'd like to learn more about that, certainly reach out after the webinar or get in touch with one of our team through our website, and we will be in touch with you. One project we do have currently on the market is in Wanaka, on the corner of Anderson and Albury Road. Now, this is slightly bad timing because we have recently contracted the last one. But there were 22 units in this development. It's very close to completion. In fact, it is completed. They're all sold out, 2 beds, 1.5 bath. They were priced from about $775,000, and they were consented for short-term accommodation, right?
Yes, I think so. So if you bought one of those when we first released them year and a half, couple of years ago, you could have picked one up for about $650. So you can see now we have contracted them up to $775.
Yep.
So if you're looking at other markets around the country in the last couple of years, say if you bought in Wellington, Lower Hutt, you'd be down 150 grand.
Yeah.
Whereas these ones here are up more than 100 grand. So you can definitely see how an area like Wanaka has bucked the trend of the rest of the country when it comes to falling house prices. So yeah, unfortunately, all these ones are sold out, but we are working on other similar projects in the region, as in Queenstown, Cromwell. But they are, when they do come along, jump on them, because they don't come along that often, just because resource consents are so tough down there. So as Alex said, they're tough on environmental things. They want to keep it looking nice for holiday makers and people that go down there. So yeah, but yeah, so keep an eye out, because we will be having some come through.
Yeah, so I think we've got 3 or 4 developments in the pipeline in both Queenstown and Wanaka, and even Cromwell over the next, I want to say 2 to 3 months. So keep an eye out for those. We've actually got a poll that should have popped up right now. If you want to be the first to know about any of those developments, certainly answer yes on the poll, and we'll make sure. So generally when we release a project, we do a mail out to our entire database. We'll make sure that you are emailed first, basically, which basically means you will be eligible for some of the best units in the development.
Yeah, first ones to know about the development. So they will sell quick down there.
Answer the poll, and yeah, we'll definitely put you on our mailing list. Jonathan, is that going to work? Oh yeah, okay. So where can you find our projects on our website? Now, if you go onto the Property Factory website and click on the current projects page, no, I think I'm going to play it. You'll see our current projects at the top of our website there. Click on that button and you'll see some of the projects we currently have listed. It's just important to note that these certainly aren't all of the projects we have listed or properties we have listed. We have access to probably about 1,500 different properties at the moment. And so the ones you find on our website are generally, they're there for a reason, but I guess they're the tip of the iceberg in terms of what we actually have listed. So if you go on there looking for a new build property and there's something or nothing's quite right for you, certainly still reach out, because there's a really good chance we will find something that's right for you, your personal circumstances and obviously your financial circumstances too. So yeah, I mean, that's essentially it. I think the general gist of it is we do think Queenstown is a wonderful place to invest if you can afford to get your foot in the door. Now, certainly don't be put off by Queenstown's median house price of about $1.8 billion, because there are cheaper options, especially if you're looking for a property to rent out or even a property to holiday in. You might not have a large family. You might, there's a good chance you might be able to purchase a 2-bedroom townhouse, for example, in the likes of Queenstown or Wanaka for, I don't know, 700, 800, 900K.
Yeah, that's right. And there are quite a few very expensive properties in Queenstown, Wanaka, which do skew the numbers a bit, probably more than somewhere like Auckland, where there's still expensive properties, but there are some very expensive properties in that region, and they probably draw the numbers up a bit. So there are good investments in the range between, as Alex said, maybe 750 and $1 million that do make sense. So, talk to us about those, because you can definitely get into the market still. It's just a matter of knowing the properties to buy, pretty much, or how to get hold of them.
And not all of our properties in Central Otago are on our website too, so certainly reach out.
Yeah, there's definitely other ones there. And as Alex said, the ones on the website are there for a reason, because we've picked them for whatever reason, because we feel they're great value in the market. But especially if you're a home buyer, a first home buyer even, something there may not suit you, but that doesn't mean that we'll probably have something else that would suit. So
Yep.
definitely talk to us anyway. But for investors, those projects on the website are there for a reason. And that's because we feel they're probably the best deals that we have in our stock list at the moment, but there may be something that doesn't suit you. And, you know, we can help you find the right property outside of that stock list on the website. So
for sure.
just talk to us.
So that's basically the webinar team. I thank you so much for coming along. It's always wonderful to see so many faces on the webinar. We're growing this month by month, which is wonderful. If you're based in Christchurch, certainly come along to our next seminar, which I believe will be held before the end of the year if we're doing them quarterly. So yeah, no, come along. If you've got any questions, please fire them through. We're happy to answer them right now. So yeah. Oh, I think we've got a question here. What do you think about Cromwell? I think we've just answered that. I assume it was asked sort of earlier in the webinar.
Yeah.
Great place to invest,
Good
in
place
my
to
opinion.
invest. We think it's probably an area that has a lot of growth left in it, and in the area compared to Queenstown, Wanaka, and yeah, I mean, there's some good projects there, and it's got a lot going for it. So
Yep,
yeah,
sure.
definitely a good place to invest.
Yeah, so this question here, Jack's Point, Falconer, lots of very attractive plans for investors. What are your thoughts? Yeah, I mean, a lot of these prices, and we have actually recommended and had an agency agreement signed with these guys at one stage. I guess a lot of the prices they're offering are a little bit more expensive, and that's certainly not a bad thing. But for a lot of the investors in our database, what we've found is that price point is a little bit high.
Yeah, I think so. Probably, and some of the yields look quite attractive in that Jack's Point development when short-terming it. But I think, you know, prices were starting at about 1.7.
Yeah.
And there wasn't many people in our database that were looking to spend that much money on one property. But some of them did have very good rental yields based on short-term.
Yeah.
So not necessarily a bad thing. But
the wonderful thing about that development in Jack's Point is that there are so many different options for investors. Like, as you say, Kay, a whole lot of different floor plans and also different management structures as well. Some properties are zoned for short-term accommodation, some long-term. And so it just offers investors a wide variety of investment options, really. So yeah, not a bad
not bad, but expensive. That was all.
And bloody cold in Jack's Point too.
Yes, it's chilly out there.
Yeah, great topic, guys. Where do you see the nightly rates sitting for 2, 3-bedroom, 365 VA and managed properties in Jack's Point? It's hard to know off the top of my head.
It's tricky.
I'm not a property manager, but for a 2-bedroom property, I would have thought, and I would have thought it would be sort of close to that Riverside, the Albert Anderson Road appraisal we had.
Just depends on Jack's Point, because there are some really nice 3-bed sort of more terraced homes and things there, which I think when looking at it, we're even up to $1,000 a night, maybe more, whereas a smaller 2-bedroom townhouse might be, you know, 400, 500 a night. So it really depends. There's a real range there depending on the property.
It is really hard, but if you do have a property in mind, certainly send it through. We'd be happy to speak to one of the local property managers we work with down there just to get an idea of how much they think you could achieve on a short-term basis.
Or if you are looking at something down there, we may know, so send it through. It just depends because there's a real range down there. As I said, there's some real nice 3-bedroom properties with garage and things like that, which would rent quite highly, maybe $1,000 or more a night. And then there might be some quite small 2-bedroom apartments, which are quite, the nightly rate's quite a lot less. So yeah, as Alex said, there is a real range of floor plans and options in there. So yeah.
80% occupancy in your example seems really high. Are you seeing those occupancy rates in the holiday rental market in those areas? So I think it's important to note that 80% occupancy rate is an average. So during some parts of the year, for example, summer, it could be higher. And in shoulder seasons like autumn, even spring, it will likely be lower. Like I know at the moment, because we're moving into spring, it may be a little bit lower than 80%, but on average, based on the numbers we've seen in previous developments we've recommended, I think 80% is a fair representation, and property managers we work with would attest to that too.
I think it's pretty fair. I think probably this winter's been a little bit quiet just because interest rates have been high and people haven't got a lot of money to spend on skiing and that sort of thing. Plus the snow hasn't been that good. So potentially occupancy rates have been a wee bit lower. But then in that example we showed, we've been very conservative with our nightly rate as well. So it sort of can average itself out a bit.
Yeah. Like
$240 a night's quite conservative for a unit like that. And some and in some situations you get a whole lot more than that. So it sort of evens itself out a bit. It's really tricky to forecast Airbnb, and that's why it's a bit riskier.
Yep.
But it can work really well. So it's just a matter of the best thing you can do is get a hold of some real stats, and then you can see exactly how it performs.
Yep.
But yeah, maybe 80% high at the moment in the current market, but then the nightly rate's low. So I think it does even itself out in that example.
Andrew, you actually own a townhouse down in Wanaka, and you've been happy with the way it's performed since you've owned it, which would be a couple of years now.
Yeah, I had one down there a while back, and it performed well. So it just depends. Depends on the property manager you get as well, and how they do, where they advertise it, and there's a whole lot of other factors too. So a lot to consider, but they can go very well if you get the right property manager and get it advertised right. Sometimes they're a bit slow for a start as well, because you need to build up reviews and that sort of thing for it to end up at the top of the searches. But when you do, they can go really well. So definitely something to talk about to the right property manager. But there's definitely opportunity down there to make some good yields.
Yeah, so in terms of restrictions on the number of days you can complete Airbnb short-term rental in that area?
Yeah.
It depends on the type of zoning for a property. So like at the Property Factory, we have a couple of developments on our books, and that Anderson Road project in Wanaka was an example where it's solely zoned for short-term accommodation, which basically means it can be rented out on a short-term basis 365 days a year and no longer than 90 days at a time.
Yeah.
There are situations in Queenstown, for example, where you might need a consent to rent your property on a short-term basis. And in that instance, it's certainly maybe worth applying for a resource consent for short-term accommodation. But it's really a case-by-case basis when it comes to various properties in the likes of Queenstown and Wanaka.
It really depends. And as I said, a lot of the ones that we've been selling down there do have a short-term consent, which is the best thing if you want to do that. Otherwise you would potentially have to get a resource consent depending on how many days a year you want to actually Airbnb it. So yeah, it's case-by-case basis, really. Yeah.
What is the size of a 2-bed 1.5 bath in Wanaka? About 70.
68.
Yeah, I was going to say 72, so 4 square meters apart.
Yeah, 68 to 72, somewhere in there, depending on the unit. Plus a car park on top of that, and obviously an outdoor area, but that will be the internal size.
That's all you really need in Wanaka, like
yeah.
if you're not spending too much time there, I don't think.
Yeah, I think they're fine. Yeah.
Yep. Average price of a 2-bedroom, 1-bath, 0 car park townhouse in Queenstown. Gosh, it's hard to know, but off the top of my head, of the properties we have in our books, they're sort of ranging from high 7s to mid 9s, depending on the unit and where in Queenstown it is.
I think so. No car park, 2-bed, 1-bath. I mean, you're probably...
Oh, sorry, that's no car park.
Mid 8s.
I don't think we've got anything in Queenstown without a car
Not really
park.
in Queenstown. Potentially in... I'd say... Yeah, you're probably looking mid 8s for something like that. Yeah.
What do you think about apartments in Queenstown, Wanaka versus townhouses? I don't know. I mean, I haven't got any data to back what I'm about to say up, but there are obviously a lot of apartments in Queenstown, and they probably perform better than an apartment anywhere else in the country, just because they do have wonderful views over the lake a lot of the time, and that sort of thing, which obviously drives demand and therefore property prices.
I think so, especially in Queenstown itself, where it's a bit like Wellington, where apartments go quite well as well, because there's lack of land and you got mountains and the lake. So,
and where there is land, it's often expensive to build, like
expensive
on the hill.
to build and buy. Yeah, so yeah, I think they probably do pretty well down in that area. Capital gains have been good historically. whereas somewhere like Auckland, capital gains haven't. So
Yeah.
yeah, I think they go well. I mean, there's not a huge amount of townhouses being built there, really. A lot of it is apartments. We're seeing more townhouses now out in the Frankton area, whereas along Frankton Road and then going into Queenstown, they're really mostly all apartments. There's some sort of terrace housing and that sort of thing.
Yeah.
And capital gains have been really good historically in apartments down that area.
Yeah, no, that's a good question, Ryan. Appreciate no, good question. Right, that's all, everybody. Thank you so much for coming along, and thank you for the questions. They were wonderful questions. I think we both feel as though the Queenstown Lakes property market is a good one to get your foot in the door to, if you can. I certainly hope to one day. Not quite there yet,
I think
we'll get there
it's
eventually.
definitely a good place to invest. So talk to our team about that.
Yep.
And we can help you find the right property down there.
Thank you so much, everybody. We'll see you in September. Hopefully the weather will be a bit warmer and interest rates will be a little bit lower. Cheers, guys.
Cheers. Thank you.